The stock market carnage this year continues to get worse, with the S&P 500 recently falling into a bear market amid rising fears of a looming recession. Investors have grown increasingly concerned about the Federal Reserve's ability to achieve a soft landing, bringing down inflation without plunging the economy into a recession, as it aggressively tightens monetary policy. Most Wall Street experts predict that the Federal Reserve will raise interest rates by 50 basis points, which would bring the federal funds rate to 1.25% at its policy meeting on Wednesday. After a hotter-than-expected inflation reading, consumer prices hit 41-year highs last week that stoked recession fears. However, some experts are now calling for a 75 basis point rate increase. In recent days, several major firms including Goldman Sachs, Barclays and Jefferies have all changed their forecasts of a 50 basis point increase to a 75 basis point hike. The last time the Federal Reserve raised rates by 75 basis points was in November 1994, when the central bank was able to orchestrate a soft landing by tightening monetary policy ahead of rising inflation. That increase was part of a series of rate hikes by then Fed Chair Alan Greenspan, who raised rates 7 times over the course of 13 months, from 3% to 6%, between early 1994 and early 1995 in an effort to keep the economy from overheating. In 1994, stocks were only slightly negative for the year, falling just 1.2%, and the Fed was able to avoid a recession and stocks rebounded 34% in 1995. What's more, after the rate hike in November 1994, stocks dropped only slightly before rebounding ahead of another rate increase in February 1995, according to data from CFRA Research.